Ladies and gentlemen, in keeping with the inclusion and digitization themes of Bharat Fintech Summit, we are now moving on to the panel discussion dedicated to the topic Microbiz, Macro Impact, Fintech and Digital Ecosystem for Inclusive Growth. We'll need 2 minutes for a quick setup. Meanwhile, I will just announce the names of the speakers. The panel members, we have Mr. Anurag Nigam, Chief Business Officer from EPS, Mr. Abhishek Kothari, CEO of Pepper Money, Mr. Chinmaya Desai, Chief Business Officer, Falcon, Mr. Sumit Gupta, ex-CXO, Group Head, Corporate Banking, Yes Bank, Mr. Sheshan, EVP, Head Payments, RBL Bank, and the moderator is Mr. Srikant Patil, Managing Director and CEO of DIGIALLY. This session, ladies and gentlemen, explores the transformative potential of fintech and digital ecosystems in fostering inclusive growth, particularly focusing on the impact on micro businesses and provide insights into how these technologies contribute to broader economic empowerment and inclusion. All right, so may I please request our panel members to join us on stage along with our moderator. Requesting the moderator to please keep an eye on the timer that we have right in front of the stage. Thank you.
Hello, everyone. I just, the panel is settling down, as I can see. So we have roughly around 40 minutes, and we have very, very exciting conversations. We just started few conversations and, a lot to hear from everyone. So my name is Srikant. I run a company, Fintech, in Singapore, named DIGIALLY. And we've been operating on the SME-related, access to finance, right? And it's a topic very close to my heart. I believe that, each one of the panel members have a lot to add onto this. So maybe we can just do a quick, 30-second intro for everyone, and then we can go into some of the questions.
Thank you. Hi, my name is Sumit Gupta. I've been with Yes Bank for our last 20 odd years, and last stint was the Chief Risk Officer. Prior to that, I was heading a variety of businesses, right from mid-markets to SME to rural, financial inclusion, and the works. And the one which has been something which we did very differently was the supply chain banking piece. And we were a little different from the way market banks were doing it. And I think we tasted a huge amount of success as an organization. And it led to us multiple benefits. More important, the constituent partners also found significant value add the way we ended up implementing it. Of course, the disruption led by fintechs is absolutely welcome because it helps to expand the market. And as he said, Srikant mentioned, it generally helps getting access to finance for the last mile or the lower end tier 2 and the tier 3 guys. Thank you.
Thank you. My name is Anurag Nigam. I've been working, like some of the guys here, I've been working for the last 28, 30 years, roughly about 19, 20 years with the Tata Group. And currently work for a company called EPS. We are a ATM, a fintech, a combination of both B2C as well as B2B solutions company. Interestingly enough, I've seen through the career, I've seen quite a few black swan events, which mostly what my experience has been that they've converted into ample opportunities. Believe me, I was with TCS prior to Y2K. And that was the time where everybody thought that the world had ended, but it created huge opportunity to change the Indian IT industry. 2016 saw demonetization. Again, we thought this black swan event is going to create so many problems, but I'm sure that it created a lot of opportunities. COVID, bad phase. But again, as we come out of COVID, Bharat, the resurgent India, I think speaks of volume. And the guys in this Bharat Fintech Fest, we see opportunities galore. So while we do not want to wait for black swan events, I think there is so much opportunity in this space, and there is so much need for both innovation, and if you have a simplistic solution, there is so much more adoption that is available today. I see this as a very, very positive sign. So, thank you.
Thanks. Hi, I'm Abhishek Kothari. I'm the founder and CEO of Pepper Money. We are a pretty new business at this point of time, building cards for Bharat. So essentially looking at the emerging cities of India and how can we capture the hyperlocal commerce in that city through a cards business. Before that, I built a company called Flexi Loans, which I founded in 2016, exited in 22. So my life has been kind of with the lens of financial services, data, technology, and looking forward to interact with this panel.
Hey, thanks, Abhishek. Hi, this is Chinmaya Desai. I'm right now part of Falcon, which is a fintech infra company. So we build stacks for banks, for lending, for cards, for neobanking, for UPI. I have been a banker most of my life, so I know, what banking can do and what it cannot. And that is one of the reasons I moved to fintech, so that we can do a lot of, tech, a lot of innovation for banks, which will eventually help the economy grow and which will eventually help micro businesses scale.
Hi, good morning to all of you. I'm Krishnan. I head the payments product portfolio for RBL Bank, part of digital banking team. And we run the digital franchise for the bank, providing solutions to B2B, B2C, largely B2B. This unit is also engaged actively in collaborating and partnering with fintechs. So in essence, I am the sage in between the tech team which is delivering and the business team which is asking for a solution, and at times have the ability to give a blessing of a solution which works for both the sides. Thank you.
Wonderful. I'm so excited about the mix of this panel because we have bankers, we have fintech, and we have people who have really done work which is making impact, right? And I just want to for the sake of re-emphasizing the fact that we always talk about micro businesses, and a lot of people I met, so as I mentioned, we are super passionate about micro businesses as well as small medium enterprises, right? Very few people know that when Chandrayaan was sent, that there were around 300 small medium enterprises who helped make that happen, right? And we hear about the GDP numbers that there is probably 30% of GDP, 50% of exports, and all of that we keep hearing. But what I want to ask the panel is, while these are small corporations or micro organizations, right? What is your opinion why they are creating macro impact, right? And why are they important for us in the Amrutkal? A lot of us are very passionate. I heard from Anurag about the fundamentals changing. As well as Chinmaya mentioned about helping the SMEs on that. The cards are also going to kind of bring that revolution. So maybe Sumit, you want to bring up why micro and SMEs are so important for the economy.
So the starting point is the ability to generate jobs, ability to get people to be part of a formal banking system. The access to finance, I'll go back to those terms. They are not just three words. They are very powerful words. And, so we see, thanks to the GST avatar, right, you have lots of pre-existing informal businesses converting themselves into formal structures, getting themselves GST registered. It is such a profound, event happening in the life cycle of that smallish micro entity that a lot of their employees are now recognized as an individual which have an identity in the banking system, which makes them eligible for access to bank loans. Till, let's say, 3 months back, if the guy was able to get funding for his regular needs at exorbitant pricing, 2% per month, 3% per month, suddenly he's getting at 1% per month, 1.5% per month is an outlier still, right? It changes the world. and suddenly he's able to get a home loan for his affordable housing. So the impact for the micro guys, this building block of the small and medium, I mean, you don't start small, you don't start large corporate, you start micro and you work your way through to become a large corporate. It is extremely profound light right on the ground for each of these aspects, which itself will make a transformational job for people at large, and hence it is an economic booster for anything in all kinds of services and products that the economy offers.
Abhishek,
If I may just add
yes.
one point. So, at Flexi Loans, we built an SME lending institution focusing on the exact micro sector that you're talking about. And apart from the financial access, one very, very fundamental point is what happens to the household of that MSME and the people that they employ. Once they become part of the formal economy, they can grow, they can get access to capital. And this is real research. When we speak to our customers and MSMEs, that what really happens, why do you borrow? And naturally, they want to grow the business. But the fundamental point is that once the MSME is successful and able to grow their business, then they say, okay, अब मेरा बच्चा पढ़ने के लिए अच्छे कॉलेज में जा सकता है. They don't have to work at the same shop. Then they can hire 2 more employees, generate more employment, which is what was mentioned. Then the person who's coming into that shop to work also gets a part of the formal economy, because now you're part of that digitized transaction layer, and the salary can be processed in that employee's account. So the same spillover effect happens in that employee's family. So there is a lot of push or impact of that towards educating the kids, towards getting a home loan, towards getting a better quality and standard of life. And that, apart from the growth of business, is invaluable, because that is what changes the grassroots of the economy. Now there are more skilled people in the economy and your country grows faster. So I think that's a point that we seldom forget, but very, very important.
A lot comes from the data that you spoke about. 45% of the workforce comes from MSME, right? They have a huge cascading effect, so to say. And I think they also represent the largest consumption community. If you look at it as a segment, that is the largest consumption community, which in turn, if that grows, you have a complete cascading effect on the economy, both in terms of the GDP and the way we look at it, more in terms of the opportunity that it creates, both for the solution providers as well as the, sort of the services and consumption resource providers.
fantastic, because I love these points, because we are not just talking about numbers on GDP or these exports. We are also looking at the opportunity for employment. We are talking about the social impact. So micro and SMEs, MSMEs, essentially create phenomenal impact on the society itself. And a lot of that, as you said, the consumerism or consumer consumption will grow because of that. Now let's take a step back, right? We've seen, we had this conversation in the green room. We are very proud of the India stack, what has digital public infrastructure which has come into India. And now there are multiple countries who are going to adopt not only just the payment stack, but they will also be, Aadhaar stack also going to be adopted by a few countries, right? This digital public infrastructure is a story which we tell across the world, right? How do you think, and I'll come to Chinmaya on this, is how do you think it's helping this entire revolution on the micro segment as well as the MSME segment, right? And what kind of future you see where some of these will take us?
Yeah, I think it's a very interesting question, Srikant. So, traditionally for the micro segment, I mean, banks have always looked at this micro segment from a supply chain lens, right? So whenever you have gone to a micro business, the question that bank asked is, who are you supplying to? And, then it comes under the entire supply chain discounting and those kind of things, right? Which is where access to credit was very difficult, because these people had almost zero credit history. Now, what has happened is with the digital infrastructure, with the India stack coming in, I think more banks are also giving more weight to the transaction history than the credit history, right? These guys have access. GST has unified everything across the micro segment. So anybody having more than a 20 or a 40 lakh turnover is now GST registered. So you know exactly what is the business the person is doing. So the decision making is easy, right? Access to credit is easy. The time taken to disburse that credit is also easy. And as Abhishek just mentioned, right, that players like Flexi Loans and players like others who are building that entire stack, in adjacent to the digital public infrastructure, are actually helping banks in arriving at that decision even more quickly.
Wonderful, wonderful. So Krishna, if you have to talk through some of these initiatives and you see the business, let's say 5 years ago, how bank was operating without the digital or, just the early stages of digital public infrastructure versus now, what are the things where banks are able to leverage that to offer services for micro and small enterprises?
Hi, thanks Srikant for the question. So let me give a small perspective on how is our MSME segment growing. There is a recent report on MSME landscape, and if you see roughly there are around 65 million MSME here in India who are actually running businesses, and this contribute to roughly 30% of the GDP. In matured markets, the contribution is roughly to 50%. So the growth potential is 20%. The overall credit demand is roughly around 69, thousand lakh crores, and addressable market is roughly around 44,000 lakh crores. So this is again from the same MSME report, which is evolving, and there is a potential of 25 lakh crore to be catered to. If you see, Make in India has become a big initiative, right? And this actually the whole PLI link scheme, and if you see the whole SME segment is booming, so that's on the supply side. Now, if you see the demand side, there is a good growth in the rural per capita income earnings. There the potential is actually moving from 2x to 3x. More customers in Tier 2 and Tier 3 cities are ordering online. That's where the bulk of the business is coming from. It is estimated that roughly 250 million customers contributing to 1.5 lakh billion turnover is the potential contribution until 2030. Now this is on the landscape. Now what are the enablers which are available, right? And this has been evolving over a period of time. And fortunately, there is a reasonable progress if you put together everything, as Chinmaya just said, that doing a digital underwriting is possible now, while it couldn't have been thought about earlier. Things like invoice-based lending, GST-based financing is something that is possible now. We all know that roughly we have 135 to 150 crore Aadhaar. And you'd be surprised to know that we signed roughly 125 e-signatures in the last financial year. Right? So e-sign and e-stamp is now a reality. And this is the biggest impediment. If you look at any segment like PLI or any such segment on the MSME side, where there is a need, documentation is something of prime importance. And there are many other initiatives which government is coming up. If we put all this bundle together, eKYC plus accessibility of GST. Oh, by the way, account aggregator framework. We have 94 institutions now live on account aggregator framework, both on the FIU and the so much so for that it's become a joke that some part of the day the system is not accessible. That's the kind of demand which is there to access information and be able to underwrite and create a lending product. So I think role of entities need to be very well understood. We understand that a bank which has a large reach of branches, the ability to cater to some of this demand is very different from a bank which is of our size, right? So we understand our potential and we actively engage with fintechs because they have the feet on street. They have a focused approach to generate and deliver a defined use case and solve for a problem. And it's better that we understand what's the space we are good at, and we don't compete and we deliver so that cohesively we go across and solve for the problem for the country.
So that's very useful, and I think it's an encouragement, and we were talking about Yes Bank also, that banks being open to collaborate with fintechs, acknowledging the fact that that certain things fintechs are better, certain things banks are better, right? And that collaboration could actually make it much better. We are across the world, and just to give you the scale of this access to finance problem. World Bank is going to create, publish these reports. There is $5.7 trillion of gap in access to finance for MSMEs across the world, right? And I'm sure that India, while we heard some numbers, from Krishna, I still believe that we may have $1 trillion of gap in India itself, right, on this. Now, 5 out of 6 SMEs across the world do not have access to finance. They are underserved or unserved, right? And that's globally. What I want to get to is some of the realities, right? We talked about saying, hey, there is tremendous opportunity. Hugely excited about, the Amrut Kal and an MSME giving contribution. There is digital public infrastructure which is available. But coming back to some of the ground realities, right? MSME going to a bank or MSME applying for a loan, right? And Abhishek is smiling because he's aware of the challenges and some of the problems you may have solved with the cards, right? Or even your previous ventures. Coming back to Sumit, Yes Bank did phenomenal work in terms of kind of steering some of the innovative initiatives, being the first, being the boldest in bringing that out, and you've been part of that journey, right? You played on the business side as well as on the risk side. What are the ground realities for these MSMEs, right? What kind of challenges they really go through, right? On one side, there's tremendous ambition. We want to get this thing done. Systemically, we have infrastructure available. But what is the ground reality you have experienced?
Thanks, Srikant. It's as grounded a question as you can get it. Because, end of the day, it's not a solution that you have to throw on to people. Please formulate a problem around the solution. The problems are real, right? So you have to create a solution which addresses the problem of the customer that you are trying to handle. Now, obviously, if you have to build efficiency, you have to build efficiency at scale. So you have to bucket the problem statements in a way that you are able to solve most of them, if not all. So if you look at MSME, it could be a professional, well-educated guy who is starting something of his own, or he could be not exactly a very quote-unquote the pedigreed institution guy, but somebody who is passionate about doing something. He could be a second-generation guy of a small business owner and the likes of it. You ask any one of them, the common thread is going to be, for growing, I need capital. And I have only this much amount of capital. So how do I grow? I go to a bank, the bank says, 30 साल की profitability चाहिए. So where do I get that? And even if I have that, the bank, I will not have sizable and scale enough for the kind of capital I need. That's the harsh reality, right? Even though the guy may be making money, but the reality is that maybe he's not showing up on his box. That's how economic environment is. So the guy, somewhere a banker would know the guy is bankable. But how do I prove it on a piece of paper the guy is bankable? Because numbers are not adding up. And thus far, a lot of credit goes to the changing attitude in some part of the bank in various banks. You've got to do little unlearning and then learn again. And it takes that much amount of efforts to try and be open to doing and thinking differently despite being in a regimented setup, which has been doing things in a particular way for donkey's years. I mean, if you talk to fintechs at large, most of them tend to be working with the more number of NBFCs than banks, right? I mean, that's been the experience across stuff. One of the reasons is because, relatively speaking, NBFCs are more open to changes, and banks comparatively are less open to changes, or bankers rather are less open to changes. And it's also a question of who has more hunger. If there is a ready set business, large private sector banks has business flowing from all pockets, right? You need to have somebody running that particular vertical with deep amount of passion that I have to make a change, I have to make an impact on the society. And hence, this could be nominal in terms of volume, but it has a significant social value. Now, so it's not exact science, right? But end of the day, you need to be able to solve a guy's problem because the guy has a track record. Somebody mentioned transaction flows, right? Thus, thanks to the tech stack, the ability to track transactional record data points are far more easier now than it was, let's say, even 5 years back or 6 years back. So that is a significant plus, which is adding to your gut feel. The guy is good, but how do I do a damn justification on a piece of paper? Transactional track record comes in handy. And it's not only the supply chain piece which you're talking about. Thanks to GST, hopefully the guy is doing some GST. I mean, if the guy doesn't want to do GST, he doesn't want part of supply chain. I mean, somewhere he has to be part of the formal system. Otherwise, what else do you do about it? So, but I think the ability of the lenders, and I'm using the word lender, not bankers alone, right? Because NBFCs is a large component of your lending ecosystem. Their attitude will have to be very constructive to try and make it work to have a significant social impact. Lots of the government schemes which are there to, I mean, you mentioned, a couple of our colleagues have mentioned, who are making last mile access to formal finance, right? This can have a real multiplier effect on employees, on the guys themselves, on including large small employment, but on a larger number, hence A into B is large, and the likes of it.
I just have a perspective. And so first of all, MSMEs are a very unattractive segment for the bank. Let's understand, all of us understand that. So we talk about, as an organization also, we talk about a 5C framework to address both the gap and the solution. And I'll just spend a few minutes on this 5 Cs. The first C, and everybody recognizes that, is credit, or the credit gap that exists. Whether it is 1 trillion or 5 trillion, debatable, but there is a substantial credit gap. The problem is that through technology, what you can enable is when is that credit needed for which MSME, which is something that the first thing that the banks struggle. The second C is actually collateral. The MSMEs struggle for collaterals for their, whether it is a short-term loan, long-term loan, bridge loan. With the amount of data that is being churned, we have to look, and we have to probably educate the bankers and help the bankers to look at data as a collateral. The MSMEs have tremendous potential. They generate a lot of...
I like the sound of educating the bankers.
And that
we'll
will,
need a separate panel for it.
That will come from the retailer. So like us.
Yeah. You are surrounded by bankers. Don't forget that.
The third C that I see is compliance. Because we talked today about the fintechs can enable these guys through platforms or through solutions which are compliant from a regulator standpoint, I think that can address the compliance problems, which again can make the MSME more attractive. And that actually results in 2 other Cs, which is collaboration. So collaboration comes from, if these 3 things are, say, available on a platform as an extension to a bank's platform, the MSME's experience as well as his adaptability to most of these conforms increases. Last is, they also need a platform for increasing the commoditization or the consumption of their services or products, whatever they are having. So that is where one of the other components from the India stack, the ONDC, comes into picture. So if we can integrate these 4 or 5 things, which I'm sure a lot of us are already trying to do, it can address some of the gaps that practically exist.
Wonderful. And, I'm coming to it because I want to move to, I'm coming to you, but with a different question, and maybe you can use the same twist. We heard from Sumit as well as Anurag that there are certain things which, one is the change in the perspective of how banks perceive this as a market, right? Because there's a potential, right? And, I think there's probably 5% or less than 10% of the credit, overall credit, which is going to the MSMEs as compared to, what you see as the corporate. So, some of the countries have come up, like Indonesia has come up that by 2025, 30% of that credit, they're still in the single digits, but the government is putting that regulation saying 30% of your credit should actually go to MSMEs, right? Coming back to, and Anurag, you are, Abhishek, you've seen this field very well. What is that you would look forward from, collaboration with banks, and, how can this success of fintech and banking collaboration can really solve this problem, right? Because it's an ecosystem problem. It's not like one entity can solve it, right? So happy to hear your initiatives also in that.
Yeah, and this is what I was trying to say, that look, you talk about ground reality and ecosystem, right? What is the ground reality? Today, your driver who earns 15,000, 20,000 rupees a month can go to a bank and get an unsecured personal loan at 12%. An MSME who generates employment, has a shop, rented or owned, runs a business, has been there for 10 years, can get it no less than 18%, an unsecured business loan, if he's lucky. If he goes to a fintech, that's about 25%. So that's the reality. The reality is that we all need to get these MSMEs in. A lot of my family is MSMEs. So when I tell, वो बोलते हैं अभिषेक भाई आप लोन देते हो, कितने में देते हो? तो हम बोलेंगे 32% APR, कुछ नहीं समझ में आता। वो महीने का कितना? तो महीने का ₹1.5। अरे महीने का ₹1.5 भैया मैं आपको देता हूँ। And that is the reality. They are able to borrow locally. Every community has a method to borrow locally at 75 paisa. That is the ground reality. So until we get the cost of funding to them to a level where it starts to make sense and competes with that unsecured personal loan type of rates, only then can we transcend that 30% part of the 30% GDP to a 40, 50, 60% contribution to GDP. Otherwise, we are all scratching the surface of people who have high margin businesses and can afford those kind of loans. And then it leads to other problems that RBI is trying to kind of make sure that there is no overburdening on debt and people don't fall into the debt trap and so on. The second is,
and
people look at it
valuable point, this one, because you're saying the business model itself should be economical for the SMEs, right?
Yes.
I mean, after borrowing.
And that's where from banks to NBFCs, that whole chain of capital has to become affordable for that MSME. Otherwise, it doesn't really get to the point where it makes sense for an MSME to just go to a fintech or a bank and apply for a loan. Process is one thing. Look, I mean, this is a very pull category. If MSME needs credit, they don't care आपको 10-12 extra click है website पे, whether you ask for 2 extra documents. Of course, if you're asking for something that they don't have is a problem. But otherwise, number of papers and number of clicks is not a real problem. The problem is cost of capital. Correct. The second is, we all assume that the EMI loan is the only loan that an MSME should need. I mean, the businesses are seasonal. They need money. I mean, we've seen that in agri a lot, about how products have been constructed around the cycle. And you can borrow and then you can repay when your crop is full. So why can't we have product innovation on MSMEs to say, look, we understand that you are in a certain category which has a certain seasonality. So you may have an EMI holiday, you may be able to pay late without really burdening you with everything. Oh, 2 days late fee. And then a penalty, because that's the only product that is being thrown at them by the entire industry today. So there are a handful of good MSME products, and that is my second point. So as an ecosystem, I think those two things, if we can come together and solve, it'll be a big win.
I really like those, Abhishek, because you are putting MSME at the center of what they want, right? And I keep talking about this case study about Fedor, right? As a digital bank, it was one of the social experiments, right? How many times really bank asks the customer saying, what products you want, right? And Fedor actually solved that problem by saying a social media kind of thing, So you are actually hinting to the very, very crux of the problem, saying, make it viable business for me, and as well as make sure that you customize the products instead of giving me, a laundry list of products, right? Chinmaya, coming back to you, now I'm just probably going to one question for both of you. What do you think MSME's responsibilities in this case, right? We're talking about it's not always bank who have to deal with saying, hey, there is some change which is required. And Krishna, you will get a chance to also say, what is that you expect from MSME which will make this better, right? So same question for both of you.
Yeah, so I think, so MSMEs also, like Abhishek correctly said, right, they often take the easier route, right, because they are little myopic in their thinking in terms of what their business is. So idea is also that the MSME needs to look beyond, right? Not take, go to a regular money lender or something. They also have to open their books very transparently to what has happened. And typically, like it happens in most cases in India, right? And we have seen it so often that the one bad apple and the entire sector kind of suffers for that one bad apple, right? So I just want to give an example and a success story that I have seen in person. So at Falcon, a large PSU bank approached us and said, it is a 21-22 fiscal CRISIL report, said that interest rates are as high as 23%, which is in turn driving the consumer price inflation. So we want to do more MSME lending, but we want data, we want transparency. How can we do it? So we actually at Falcon built an entire commercial corporate credit card expense management stack for the bank, which the bank could then extend to the MSME. And like Krishna said, 80% of the payments are now online. So the bank could get entire visibility on transactions, entire visibility on where the MSME was spending. And then the bank could actually go back to the MSME and say, hey, listen, we can see your transactions, you're doing regular business, you're spending on search optimization, you're spending on Google ads, so we know you're doing good business. And here, we can offer this to you at 14%. So it resulted in a significant saving, and the bank's loan book grew by 79% in a year. So I'm saying these are success stories where we could actually achieve transparency, through cards and platforms.
And Chinmaya, I want to point out to one very interesting report which was published by Bank of England. What you said was one of the most important recommendation they had. They said that the borrower and lender, the reason why this gap exists is because the asymmetry of data between both sides. And you exactly mentioned that, right? The lender always lows less than the borrower. And, if we are able to be transparent and bridge that gap, that will be useful.
See home loans. Why are home loans so popular? Because, the bank is paying the builder, the bank is paying a DLF or a Oberoi or a Hiranandani, right? So bank knows exactly where the money is going. That is why home loans are so easy and so popular.
Absolutely.
The moment you have the same transparency between a bank and an MSME, I think you know what is
wonderful. Krishna, any thoughts on what MSMEs should do differently so that the bank can enable them? Like help us to help you.
Sure. I would like to see this a little outside in perspective, because giving benefit of doubt to the MSME segment, I feel it's still some journey away to put all of it together. So what I mean is the finance industry has to be for any particular bank or fintech. They have to be in the journey of their business life cycle, right? So if you have, let's say, a loan with somebody because there's an attractive rate or a ease of process, if you go to a fintech for something else, the services are getting distributed, and hence the data gets distributed, the cost of capital increases, and if you are able to sit in the whole life cycle, right? For example, let's say we're working with a large group who is still still not having a collection solution which can digitize their collection ability, right? So if we as bankers are lending, the collection is going somewhere. They may take in cash, they may deposit to a local bank, and then the money may come back to the lender. So once these things fall in place, where you have an ability to see the whole journey, your ability to look at data, underwrite, be able to have better control on the lending portfolio, plus give better cost-effective capital, will definitely enable the MSMEs.
Wonderful.
I'll just add one point, Srikant. We possibly did not touch in explicit terms on that aspect. What the cost of handling an MSME customer for a bank, right? That cost comes in different shapes and forms, right from getting the initial set of documents for processing. Most of these would be prop concerns or partnership firms. Hardly anything would be a private limited companies, right? So typically you will have a challenge on getting the these statements. Even if you don't need, let's say we are doing alternative assessment model, you don't need he says, I don't have the access to my proper financial statements. Okay. So you need bank account statements. Over the years, thankfully, some of this has got digitization. Digitization is available. The guy can give you some of that processes. So hence, you are able to now process that real time, digitally, online. Each of these aspects, and he just mentioned about the ability to collect. Each of these represent a cost element from a bank standpoint. Cost of monitoring, cost of assessment, cost, and hence everything builds up to saying, how do I evaluate the cost of sanctioning a loan, and I have to build up cost till the time I get my money back. Now, the one thing that we will hope that the customer to help him is going to be able to remain transparent and be consistent with these practices, because banking does entail ask for discipline. If a guy is running only his own money, he can do jumble up between his household and everything else. The moment but you are talking about formal banking system, you will have to learn to be disciplined about banking transactions.
Very true. I think what we covered is it's not just the responsibility of the bank. It's also responsibility where fintech and bank work together, and also responsibility of MSME. I really like that. We can probably do one question, maybe one or two questions. Anybody has any questions? Yeah, there's one guy there. Go ahead.
Hi guys, this is Bhavish. My question is for Abhishek. So, the CEO of Pepper Money. Now that UPI is everywhere, right? So, how do you see the prepaid card market ahead in the India and in the future?
Good question, and we ask that to ourselves every day. I think prepaid has a certain use case. Now, prepaid, it's not competition. RBI did come up with interoperability on wallets and prepaid instruments. So, the intent is clear that UPI should be available on prepaid cards. So, they're not sitting against each other. They're sitting with each other. That's one. So, UPI and prepaid could be used together, and that's as long as we have a PPI license. The second is then what is the use case of prepaid? And the way I see this, and this has been done so well in some of the other countries which have a similar demographic as ours, especially in the tier 2 cities, is that it acts as a very good first step for somebody to get access to a financial instrument without really going through the larger or the more complex process. If you look at India today, then there are very successful prepaid use cases. Sodexo is a great example. Zaggle is a great example. There are corporate cards, expense cards that are done on the prepaid instruments. So if there is, and I am actually a new believer of prepaid, and the way we found our use case is that if today debit cards are not used for shopping today because of 93% of debit card usage in India is for cash withdrawals. And so can a prepaid card offer somebody access to rewards just like a debit card should have done without really exposing them to credit at this point of time? Today, the only instrument that gives you meaningful rewards is a credit card. So the way I look at prepaid is credit card minus credit, which should have been a debit card, but we use prepaid as an instrument in our business at least to be able to fill that gap. But I'm sure there are many other use cases that people are working on. There was a pitch on Shark Tank, which was a prepaid card for influencers. So prepaid is a good instrument for you to get in the middle of the transaction without really getting into the complexity of a very complex banking process. That's the way I look at it. But the question about UPI and prepaid is always on.
So do you think UPI's market affect the prepaid card market?
Sorry, say that again.
UPI's use case or UPI's market, the ease of use of whenever user uses a UPI, it's so simple, right? So the prepaid card, he has to tap the POS and type some PIN and all.
I mean, convenience, you can't beat UPI. 100%. Yes. So yes, UPI is better in terms of convenience, but that does not define all the use cases. And you have to look at it a use case specific to see what's better. But in general, yes, I would agree with you. UPI is definitely better than every other instrument from a convenience perspective.
Yeah.
Well,
Even like we are building a.
Can we
We can take that
have to
offline.
move forward
Further
now,
questions
actually?
offline?
Yeah, we'll take this option. One question or
I'm
no?
extremely
Okay.
sorry, sir.
So we
The
will have
time is
to
up.
close this, but thank you very much. I really enjoyed the perspective here. One question, please. Go ahead. I think Abhishek, a lot of people are waiting to meet you after this.
You're the lucky one. So I just wanted to reconcile my understanding of informal lending systems being more expensive to the consumers, right? To what you just said that if you go to MSMEs today, they can get loan for 12% against these solutions which are offering them an 18%. So from that standpoint, in this very moment, what are we actually solving for? If you are going to an MSME and then saying, I'll give you a loan at 18% when they have access to the same credit at 12%, what is the value prop? Like, how do you even tell them, okay, come to us? Like, what are we really offering then?
No, and not everybody has access to that finance.
Okay, so gap of segment.
So there is always a segment. Second is, I think fintechs really have what they've done well is speed. It's not that easy always to get access to informal finance when you need it right now. And with the tailwind of GST and people, the MSMEs coming out of cash economy and slowly digitizing their transactions, if you look at the next decade, it's going to be less about informal, more about formal.
Okay.
No matter how you slice the market, India is such a large country, there will always be big pies on both sides, and you can still build a business on both sides. So out of 100 people that you would take representative in this room or any other part of the country, 80 to 90 people don't need credit, are not looking for credit. 10 people need credit. Out of 10, 5 are looking for price-sensitive credit. Other 5 are looking for instant credit. And that's the segment. Now that 5% is so big that we can have 10 companies and 12 banks really catering to that and still call it underserved for another decade.
Understood. Thank you.
I think credit is an exciting area. I think all of us are still exploring it. But thank you so much. We come to the close of this, and amazing. Really enjoyed this conversation. Thanks everyone for joining us.
Thank you, gentlemen. Thanks a lot for this enlightening discussion. Your diverse perspective and the insights have shed light on the crucial role that the fintech in fostering inclusive growth. Thank you once again.